bond market is continuing with its bullish run, with most demands are concentrated on the short-term maturities, especially the 2028 and 2029 papers. Senator Audu, Treasury team member at Access Bank, joins me now for market updates. Senator, thank you so much for your time. Let's take a look at the highlights of this week from Monday, when we had the inaugural speech from Nigeria's new president, and up until today, as we see. How's the market responding so far, the dynamics at play?
Thanks, David. Thanks for having me. So as you said, the inaugural speech was on Monday, and the key takeaways for the market, particularly fixed income market, has largely been on the interest rate and the borrowing appetite of the current administration. So on the interest rate side, we saw the president say that he would like to keep interest rates low to try to spur business activity, and of course, on the other side, he also mentioned that the fuel subsidy will be removed as well. So our analysts have of course tried to project around this statements, and we do believe that from that statement, the president is looking to invest a lot in infrastructure. So we might see the effects of the fuel subsidy and the infrastructure plans nail out. With respect to current happenings, we saw the new bond calendar released on Friday last week, and we didn't see any changes there. So the DMO still plans to borrow between 320 and 400 billion across the next few auctions.
Yeah. Let's also talk about investor leanings across the yield curve, talk about the bond market and then the T-bills market.
Okay, so again, a lot of the activity around bonds has been largely spurred by that, the calendar released. So the big changes there is that we saw all bonds on offer replaced from the previous calendar. So the 4 new bonds on offer are the 2029s, the 2033s, the 2038s, and the 2053s. The 4 previous bonds were the 28s, the 32s, the 42s, and the 50s. And so what we've seen is that we've seen a bullish interest on the 2 longest bonds that were previously on the calendar, the 42s and 50s, and we've seen that drive yields down on both those bonds. So we've seen the 42s trade at about 15.2%, and the 50s trade at about 15.6%. So on the Treasury bill side, there was no Treasury bill auction this week. We've seen a bullish sentiment on the short end. The June special bills and the NTBs have traded at between 1.5 to 2%, while on the long end, we've seen the May maturities trade at about 7%. There's an auction next week for the NTBs, about 182.85 billion is on offer across the 91, 182, and 365-day maturities. Our expectation is that, given that the market is currently liquid, we expect rates to continue to trend downwards. At the last auction, the 364-day closed at 7.99, down from 8.99 at the previous auction.
And I'd like to take you on that line of thought as well, the liquidity, how liquid the market is at this point in time. This is a new month as well. We are making forecasts. How do you see things panning out for the month of June?
Okay, so for this week, we saw, closing on Monday, we saw liquidity figures at about 229 billion. Closing yesterday, we saw the liquidity figures at 163 billion. And we've seen the interest rates in the money market trade at the floor of about 11.5%. For the rest of the month, we don't expect anything out of the ordinary. The maturities are mostly on the average side, so we don't expect the market to sway either way. Largely based on those liquidity figures. We may, however, see the DMO because, again, the president has very high infrastructure aspirations with regards to infrastructure. So if they do hit the ground running with regards to these plans, the borrowing might have to increase, and that would, of course, tilt market towards urge the market to more or less trade along those lines.
And as we're also wrapping up the week, one of the highlights we're waiting for is also the release of the results from last week's Smith's retail auction as well from the CBN. And let's also have your take on what's playing out in the currency market. Just about 24 hours ago, we had the CBN also refute claims that the Naira had been devalued to about 630 Naira. In a bid to reduce this speculative noise, how has the currency traded so far against the greenback?
Okay, at the investors and exporters window, we haven't seen a significant shift in the rates. So closing yesterday, we saw the INA rates close at 465 Naira, 46 kobo, which was a 14 kobo depreciation from yesterday. So the CBN came out to debunk those news articles that did come out that a devaluation or a significant devaluation had taken place. So for our observations in the market here, we haven't seen trades consummated at above those rates that we currently
I'm also
have
bringing this into focus because just last year we had the Bank of America also estimate that the Naira was overvalued at about 20% and would likely see some sort of devaluation, say between June towards August, between the 6 to 9 month timeline into the year. Do you see that happening though, from your lens?
Again, we can only take cues from the body language of the current administration. In the inaugural address, the president mentioned
unify the exchange
he'll be exactly. He said they'll be looking to unify the exchange rates, but he didn't mention the rates that we should be looking for or looking towards. So on our own side, we would mostly trade. We would mostly look at what we currently have, and those rates are currently at 465 Naira levels.